Okay. All right. It's the 11th of October 2024, Friday. This is the end of the week, and we are about 30 minutes into NY Open, about 30 minutes to NY Open. Um, so let's get to our analysis and check if you have any opportunities for the day. All right. Just a second, guys. Yeah. Okay. Right. This is the daily chart. Just check my volume. Yeah, it's all good. This is the daily chart. One second. Yes, this is the daily chart. So previous day, yesterday, the candle closed bullish right at 2632 weekly support. And we've created a daily support as well right here. Yeah, we've created daily support here, and a strong bullish candle closed above this high and right at weekly support 2632. Okay, it closed right there. Um, I don't, as I've said before, I don't pay much attention to the weekly or daily time frame for session trading, because I'm looking to capitalize on the volume for the volume with the New York Open, the volume that comes in with the New York Open, which is basically within the first 2 to 2.5 hours of the New York Open. That's my trading session. That's when I look to, take a opportunity, uh, look for a setup or take a trading opportunity within the first 2 to 2.5 hours of from the New York Open. So let's get to trading chart. Okay. So before we proceed, I do this every day. I kind of recap what happened the previous day. So yesterday I think during the session I took a loss. I had managed risk, but I still took a loss of about 2%. But then after the session was over, what price did was price created it created a new high here, right, in the New York session. So let me just zoom into that area. What happened now? I had drawn this supply zone, marked out this supply zone exactly the way it is, the way you can see it. I had marked it out yesterday prior to the New York Open. So if you watch yesterday's stream, you'll see this H4 supply zone here. Just show it on the H4. That was the zone. And I said if price begins to close above these support levels, then that's where we're heading, right? That's exactly where we're heading. So there was a move of about 120, 125 pip move or 130 pip move up. I tried to take a sell somewhere here. Let me just, yeah, I took a sell somewhere here, and that didn't work out, and I took a loss. I tried to take sells twice, right? Because candles it started to close back below this resistant level on the smaller time frames, on the 15-minute and the 30-minute time frame. So I did try to take sells twice. I lost on both of them, but I managed risk, and I kept my losses to about 2%, roughly about 2%, right? Then what I did see on the 30-minute, just after the session ended, let's go down to the 15 minutes. It's a lot more clear on the 15 minutes. That this is the New York session. This was the New York Open. This was the news candle, the CPI news candle, push price, brought price back down. And then we created a new high, right? So I ended the session somewhere here. I think I ended it probably, yeah, I think somewhere on this candle I ended the session. But I saw the price went higher and created a new high. So generally what 80% of the time when price creates a new high in a high volume session, um, price will pull back and try to retest that high. 80% of the time, not always, but 80% of the time, right? Especially if it is created, it has to be created in a high volume session. So either during the London Open, I mean during the first 2 hours of the London session or the first 2 hours of the New York session, if price creates a new high or creates a new low, it'll most 80% of the time it'll either pull back and retest that new high or pull back and retest that new low. Okay, so after news, price went up. I tried to take sells here, didn't work, got stopped out with this candle here, and I ended the session I think with this candle. After this, price went further up and created a new high. Okay, then if you watched my previous videos or my streams, you'll see how I draw the fib. Okay, I need to see at least two lows, uh, price to break two previous lows if I'm looking for a buy setup. And when price pulled back here, before it went up, it broke these two lows. So this candle broke this low, this candle broke this low, and then we had a push up. Okay, so so then there was this is the last low, the last low, the most recent low that was created, right here. And then I draw my fib, so that's the end point of the fib, that's the start point of the fib, you can see on this M15 candle. And then I just wait at this sniper area or at this midpoint of the fib. This is the 50% mark of the fib, right? This is the fib area. That's the entire area of the fib. It's about 74 pips. I wait either at the sniper or here with a pending order, okay? And I did take a pending order, stop loss below here, and it worked perfectly. Went up. That was about a 7 RR trade. I had my TP left here, so that's where I generally put my TP. My final TP goes about at least 90% of my position is taken out here. But here, because it was after trading hours, I did have my TP up here, and that trade stop loss was down there. It was about a 18 pip zone, and I touched it and went up 130 pips. Okay, so that was a 7 RR trade. So that one trade I was able to recover my 2% loss that I took and also make some gains with that one trade, right? So I had drawn this supply zone. So the idea here was that if price breaks this supply, so if you watch yesterday's stream, you'll see what I said. We had supply down here. This is where we had supply. It was here, right there. Okay, that was supply zone. I said if price breaks and closes above, then we're heading to the next supply zone. That was the idea. That was the idea for the trade. The price should head up to the next supply, because these supply demand zones pull price, attract price to them. Okay, they draw price to them like magnets. They draw price to them. So I had said if price closes above, if you break and close above here, and that's exactly what this H4 candle did. It closed. Once it closed, price pulled back and went up straight to the next supply zone. Okay, so that was the idea. I'd shared this idea, but it didn't happen during the stream time. It just happened about, I think, about an hour after that, and I did take that trade. So yeah, so again, this was how it was drawn. Prices had made a high here, pulled back, broke two M15 lows, and then we went up. So price has to kind of go up first. Okay, it has to go up, and then I draw my fib, and then that was the trade. Okay, so let's clean up the chart and start all over again today. Let's just get rid of these lines. Also, if you watch yesterday's stream, you will see this this level right here, 2645.21. Okay, if you watch yesterday's stream, I put this this level prior to the New York Open yesterday. Okay, and I said if price comes there, I'm going to take a trade with a stop loss of about 20, I think 24 pips. That was the zone up to the top of that light red box, right? Because that level is right at a 5-minute supply zone inside a high liquidity zone. That's a high liquidity zone. Inside that, there's a 5-minute supply zone. But it didn't happen yesterday in the NY session. It happened today in the London session. But it still worked. It dropped about 90 pips with about a 24 pip stop loss. It dropped 90 pips. If that happened during the New York session, either today or yesterday New York session, I would have taken the trade. But unfortunately, it happened during in the London session, and I don't trade the London session. So let's get rid of that. Let's get rid of all of these. Okay. Okay, I'm going to get rid of this as well. Get rid of this as well. Let's get rid of all of that too. Just so that I don't create confusion, let's start with a clean chart. Let's get rid of all of this as well. Okay, move these labels because I'll need them later. Okay. On the daily, we have new daily support here. So I'm going to put that level right there. That is 607.2. One second. Okay. Sorry. Okay, before we do that, just let's take a look at news, what we have today. So we've got PPI today. So that's at 6. That's my local time. That's about 45 minutes from now. So I'm not going to be opening any trades before that. I'm going to be waiting for PPI news. Okay. Let's get back to our charts. Let's continue drawing our supply demand zones. Okay. Right. Let's start with demand here, down here. Okay, so this is a rally, a single basing candle, because that candle has more wick, collective wick than body. So that's a single basing candle and a rally. Okay, that's a clean push up. It's a very nice H4 demand zone, and price hasn't come to it at all yet. Okay, so it's a very nice demand zone. Further down to the left, we do have a zone here. We do have a push up here. So that would be yeah. So this would be a drop. 1, 2, 3, 4, 5 basing candles and the rally. Okay, so this would be the leg in, 5 basing candles and the leg out. Okay, I'll clean these up later. So that's the closest 2 demand zones that we have. One is about 200 pips away. The other one is about 300 pips away. Okay. And then further down, price has already come there. That's what it did yesterday. Just gonna get rid of all of that. This low is 481. This low is 459. Okay. What is that? Okay. Right. And here, so this demand zone's not broken yet. Price has come deep into it, but hasn't broken it yet. So I'm going to leave that there. Okay. Right. These, I'm not going to worry about these prices. May not come that much low today, but we're going to leave them as it. We're going to leave. I'm going to leave them the way it is because it is PPI news today, right? But PPI may not move news as much as CPI does. It usually doesn't, but you never know. Okay, that's the closest demand zone. Okay, supply. So there's a rally and there's a drop here. Rally and a drop. So there is some sort of supply there. Let's just go down to the H1 time frame and take a look at it. Yeah, so there's a rally, two basing candles and a drop, and price has already come and tested. Okay, just look down on the M30. Yeah, so I'm going to leave that the way it is. Just put these numbers down that way here. 477, high 719. Okay. Then further to the left here, this was a supply zone that we drew yesterday. Price hasn't broken through it yet, so we do have some bit of supply left just above that. Okay, so that was the zone, that was the original zone that we drew yesterday. A drop, 6 basing candles here, 1 2 3 4 5 6, and then the drop. Okay, but price has come in the London session, has come deep into it. So we've come about 78. Yeah, we've come more than 50% into it. So we have about 40% of the zone left. Okay, right there. Above that, we've got a rally here and a drop here. So there is some supply there. That supply is a reaction to this zone right here. But I am going to mark that there. We're going to look for a basing candle here on the H1. Yeah, so that was the original zone. That was the original zone on the H1. A rally, 4 basing candles and a drop. Price has come into it. So there is about over 2/3 of that zone left. That was a 76 pip zone. It came in about 10 pips. So we have majority, 80% of the zone is still left. Okay, so let's put those numbers down here. This high is 966. 966. Okay, right, good. Okay, this high is 309. 719, 3097. Okay, this high is 3. Okay. So that's supply. Okay, perfect. I'm going to extend these to the right. Again, these zones, if you want to see how they were drawn, please go back and look maybe the previous streams or the previous videos that you can find. You'll find these are old zones. I'm not going to redraw them now, but they were drawn exactly the way I drew these, right? So if you're unclear on how these are drawn on this wick, you can go back and look at the old streams. The first 30 minutes of every stream, if you watch, you will see how these zones are drawn, because I spend about 30 to 40 minutes drawing these zones, right? Roughly about 30 minutes every day. Um, so 260 pip move. Yeah, price could come, so I'm gonna. Okay. Let's put these numbers here: 675, 656, 675, 656. Okay, and this 449, 656. And slow 449. Okay. 270. Okay, that's about 400 pips away. That's fine. Okay, so these are the immediate areas right here. Okay, this is the immediate area. This is supply. So price comes anywhere here, I'm looking to sell. Price comes anywhere down here, I'm looking to buy, as we see it now. But now, what I'm going to do is, now that we've drawn our zones, I'm going to now identify which of these are high liquidity zones, because this is the process that I follow every day, right? Draw supply demand zones correctly, right? Then identify high liquidity zones. That's step 2, right? And then after that, we get to drawing support, resistance levels. That is kind of either just before I get into a trade or soon after I get into a trade, right? Because I want to see where price is going to pause. Okay. Now, is this a high liquidity zone? Has this taken out as opposing demand zone? That's how I identify it. price dropped from here, creating this, did not take anything out to the left. So that's not a high liquidity zone, right? The one above, this one, this zone, this was a fairly large supply zone. There's just about 40% of that zone left. Did take out this demand here, right? So there was demand right here, a drop, base and a rally, and this move took out that. Okay, so that is still a high liquidity zone. It has about 40% of the zone is still left, so I am going to keep it as such, and it's also at 2650. That's a psychological number, 2650. Okay, then the zone above that right here. Okay, so did this zone here, this supply zone, take out anything onto the left, a demand zone below? Right, again, I'll have to go down to the H1 because that candle has no base. So this zone took out this demand here. You can see drop, a base and a rally, and this move took that out. Okay, so that too is a high liquidity zone. Okay, done. The ones above are already high liquidity zones, and that's exactly the way I identified it. So I'm not going to repeat that process now. Okay, we've got about a couple of minutes to NY open. So this is what we have so far, and that's H4 supply. That too is supply, but that's a high liquidity zone, and that isn't. Okay, then below, did this demand take out anything on the left? So again, we'll go down to the H1 because it's not clear on the H4. So this move up here took out this supply. There was a rally, two base-in candles, and a drop. Okay, a rally, two base-in candles, and a drop. And this move here, this move up, took that supply out. So this is a high liquidity zone. All right, this is a high liquidity zone. Then the one below, again, let's look at this one right here, did take out this supply. You can see it on the H4. You don't have to go down to the H1. There was supply here, rally, three base-in candles and a drop, and this move up here that started here took that out. Okay, making this a high liquidity zone as well. But we have a wick that has come right into it, gone right through it. So the next time price comes, it may just go right through, or because this wick had gone through and ignored this demand area, we may get a reaction right here to go up, right? Exactly around there, around 2610 or 260950, if we get there in the future, right? Maybe next week. I don't think it'll come there today. We're about 350 pips away. You never know. If price comes there, we might get a move there. Okay. So then this is not a high liquidity zone because prices come deep into that zone. There's just about 10% of that zone left. So that's not a high liquidity zone. Let me just extend these to the right as well. Okay, good. Okay, so this is the New York Open. Okay. Yeah, this is the New York Open. Now, where would price, if price is to turn here? Now let's just look at the daily time frame. We are approaching this level. This is a lot of supply here. You can see the supply even on the daily. You can see a rally. You can see four base-in candles and a drop. So there is even supply on the daily. There is 2650, a psychological number. If you look at the weekly, we are last week the price closed below weekly support 2672, but just above 2650. So this week may close bearish, just may, right? I don't know that for sure, but it may close bearish because we are on the lower time frame. On the daily, we've come into daily supply. So that's rally, 4 basing candles and a drop. That's daily supply right there. From there to there, that's daily supply, 278 pip zone. Obviously, I'm not going to take a trade with such a big stop loss, but that's a supply zone, okay? And that supply zone has taken out this demand on the left, so that's high liquidity daily supply. But more than the daily, I'm more interested in the H4. All of that is supply. Now, where could price, if price is to push down from here, or to get a reaction or a reversal, where could that happen? Because I want to get in on a very on a smaller zone, right? As small as possible, so that my RR is positive and not negative. Okay. So let's look into inside this wick. This is a liquidity wick, right? From this supply, price push down from here. So if you go down to the H1, okay, I'll be back in about 5-6 minutes. I'm gonna grab a coffee and come back. Okay, and then we'll just continue this. Okay. Sorry about that. Okay, so let's go back to the H4. So that's the supply zone that we had marked as a high liquidity zone. Price is coming to it. It should break this because this isn't a high liquidity zone, the one here. So we should break right through that. And we should come here. If price comes here to 2650, where would be the possible area to get a reaction? So on down to the 30-minute, there is that candle there on the 1 hour. There is that push down. Um, we might break through it. We have already come into that zone. We might break and go through this, but let's just look at it on the 15-minute. Okay, so that candle right there, that's a bearish engulfing candle right there, and the push price down, and that is a 48 pip candle, perfect. So I'm going to mark that candle, high 309, low 847, 309, 847. Okay, perfect. Just look at the 5-minute. Yeah, that is a nice 5-minute candle. Um, price is very close to it, just 20 pips away. There is supply right there. There's a zone right there that closes 928, open 929, 928, close 928, open 929. Then we have up here, close 199, close 199. Okay, right. So there is that. Okay, and then the one above, in case price breaks this zone right here and comes to the H4 supply zone above it, comes to this one, right? I'm going to take a look at this and see where price could come to inside this. Let's go to the H1. There's a big candle right there. Go down to the M30, there is that candle. Okay, that's a nice drop there. But price has come deep into it, has come to the midway point of that candle. So that candle is about a 99 pips, and we've come about 40, 38 pips into it. It's also come here about 42 pips. So it's come in midway point of that candle. So I'm gonna have to look down on the 15-minute. 15-minute is that candle right there. 75 pip candle. To go down to the 5-minute maybe. On the 15-minute, 75 pip candle, we've come 2/3 of the way, or at least 50% of the way. Price has come 50% of the way into that candle. So yeah, we might just go right through this zone. There might not be any liquidity left in this zone up here. If we get here, it might go through to the next one. Let's just go down to the M1. Sorry, where are we? Just put a marker there. The M1, it's this candle. It's this candle right here. This is the liquidity candle. This one right here, 31 pip candle. But price has come into it. 586267. 586267. Yeah, so we've come into it here, and we've come into that zone here as well. Come into that zone. Come into it here. High 309. Yeah, that zone's been tapped. 3.19. Okay, that's what's left of that zone. Okay, so if price comes here, I'll be willing to take a trade with a stop loss there about 27 pips. Okay, and let's put one right there. Oops. Three 319. Then one right here. 542. Close 543. 542. Okay. Okay, we've got about 13 minutes to news, 12 minutes to news. Yeah, 12 to 13 minutes to news. Okay. So if price pulls into this, this is where I'm willing to take a trade here, here. Stop loss above here on these two trades. So that's about 37, 36, 37 pips. If you go in, I'll have to manage risk and close partial positions. If you get to the next zone, then I'm willing to take a trade here, 2653.19 and 2655.42. Stops above maybe this candle here, or maybe here. Again, 28 pips, 30 pips. Okay. If you do go deeper in, then I don't think this zone is going to hold. It's going to break and go into this zone right here. Now, if you go into this zone, I've already marked that previously. So there's a big liquidity candle drop from there. That's a bearish engulfing candle again on the 15 minute. On the 30 minutes, just a clean wick. On the 15 minutes, it's a bearish engulfing candle. On the 5 minute, it's this big candle right here. Okay, so the low of that candle is 60.13. 60.13. That's a big zone to look at the 1 minute. Yeah, up here. This supply drop, base drop here, and this candle here. So this low is 220, 220, and this close is hardly anything. I'll mark it anyway. Close 187. 187. Okay, we've got daily SR there, 2662.7 or 2662.5. And then further up, we got this 1 minute candle here. This low is 545. 545. Okay. Now, I don't think we're going to get up there. It's 150 pips, but you never know. There is news today. Yeah. Right there. Okay. Open 6.5. Open 6.5. Okay. Done. Price has broken through this. We've got another 10 minutes to news. As expected, price did break through this. I'm going to get rid of that. Now we are coming to this light red area right here. And that's the area that I've marked for possible trades. So if I do take trades here, the stop loss is always, it's going to be at the end of that light red box. If I get one inside this, then it'll be at the end of that light red box. If I get one in here, it'll be there. If I get one in here, it'll be there. And get one in here, it'll be there. Okay. It's not a big stop loss. It's always about 30 pips, 32 pips, or less than 30 pips. Okay. Sometimes even 24, 25 pips. Yeah, and then if we do come down, we're coming down to this area. It's about 100 pip drop, and then the next one is weekly support 2632. But we first have to get through this area down here. We've got to get through this demand area to that drop. Okay, that's a 100 pip drop. Because after that, price has to may pull back again further to break this to come down. Okay, let's look at the 15-minute. We've broken a high, we've touched this. The next one, this candle, the next candle, if it doesn't break the high, if it respects this high, then it'll drop straight down. But I want to see price touch this. I want to see this candle touch this light red area before it does that. If the next candle, the news candle, the news 15-minute candle, if it is supposed to drop, then I want to see this current candle touch this light red area first, and then the next one can respect this high and drop down to these lows right here. If we come down, we're going to take out this candle has no bottom wick, so we're coming straight down to take out that low. So that's a 100 pip drop. That's a trade that I'd like to get in on. If this doesn't touch this light, then very likely the next candle is going to break this high and continue higher. Okay, that's the plan. 7 minutes more. Let's see today. Okay. So they are expecting bad numbers. So yesterday what happened? Yesterday they were expecting bad numbers and we had good numbers. And what did price do? It just went up. Right? Dropped and went up 400 pips. So this really doesn't mean anything. Okay, this doesn't mean price will move to areas of liquidity, to collect liquidity, to go in the opposite direction, right? That's exactly what happened here. CPI price dropped, collected liquidity. We had marked this level here. I think at the beginning of the week, or since the beginning of the week, or last week, even last week we had marked this level, and price dropped right to it. And there is a 5-minute demand zone in there. It touched it and rallied up. Okay, so price will go to liquidity to continue to collect liquidity to continue in the opposite direction, to go in the opposite direction. So these numbers really don't mean anything. Yeah, so we had good numbers yesterday, but price gold still rallied. So today they're expecting bad numbers, and gold might just drop. I don't know. Gold might just drop. Yeah, but it's a Friday, so I'm going to be very careful. I don't want to um, give away my gains. Right, I've made about 7.8% this week. I don't want to give them away. I want to kind of be very careful on how I trade. 5 minutes more for news. Okay. We've got no top wick here. No top wick. So very likely price is going to come back and take out that high and continue higher. Okay. There is a push there. It's a doji, but on the 1 minute, there's no top wick on this candle. So once we take out this high, price should go up higher. That's what I'll be interested in. 38. Yeah, 37 pips, 38 pips. Zero 0.5, 0.6, 0.06. Two minutes more. 2 minutes more for news. Let's see. Price is pushing down here. I do want to draw this here. I just want to see what price does. This high 830, 498. Okay. We've broken two highs. This candle has broken this high. This candle has broken this high. And if the next candle respects this high, then we should drop straight down. Right? Should drop straight down here, and then maybe here, 100 pip drop. So let's see. But this candle has no top wick. A minute. 1 minute. Let's see what happens if he gets there. to that sniper level. Yeah, just drop straight. Okay. Take another entry there. Yeah, we're going high. We're going high. Yeah. Price is going high. Took out that high. We are coming higher. Okay. It's one place I want to take trade. Another one at 2650 maybe. Yeah, 2650. And then the last one here. Okay. That's the idea. Okay. Price to come down here. 28, 40. Mm-hmm. Yeah. I'll place a pending order there, 1.99. Stop loss above this. We are coming down. Price is pushing down. Needs to 5-minute candles need to close below this light red area for price to continue down. Ideally 15-minute candle. 5309. Okay. 3.09. Okay. So pulling down, pushing down from 2650. Touched. I took a trade right at just above 2650, coming down. It should come down here. Partial positions closed. Coming down. Um, okay. So partial positions closed on both trades. So I'm at a break even now. With that, I took a small loss previously, but at a break even now. And price should continue down here. Okay. So should continue down here. That is 640, 641, 90. 38, 125. Keep that at 125. Let's see, it's a nice touch and drop. So stop loss was above that light red area right there, about 30 pips. And we've dropped about 60 pips already. Coming down, we should be coming down here. So this open 392640. 2640 is where I'd have to take one of the positions off. 2640. Just to be safe. So first TP is about 88 pips. And then the next one here, 2629. That's 200. Okay. Okay, so that's the final TP. Now that's the first one there. That's about 88 pips, 30 pips stop loss, 88 pips, and the last one, the final one, is about 210 pips. Okay, that's a trade. So that's the light red area that we had marked. Price perfectly to the pip touched this, right? They will mark this level just before the NY open, 2649.28. That's exactly where price touched. I took an entry at 2650 at the round number, touched it, dropped down. Okay. Now here, this is the first area that price, support area that price should come to. Now let's draw support resistance levels. Okay, that's the so there is one there. Open 136. Oops. What am I doing? One, 136. Okay. And resistance right about there. 40, 80. Okay. Extend this to the so you can see price perfectly touches it. The and past price action perfect touches it, and that's the first level right there. So if you close below that, sorry, the next one should be right about there. Yeah. It's open 787. Yeah, we are coming down. So that's price may stop here, right? There is a support right here, so we may pause and pull back, but I'm not going to close my position. I'm going to keep it in between these two levels. So this is the next level. So if you break here, we're coming down here. So I'm going to keep it in between, okay? Because there is M30 support right there. Okay, I'm keeping it at the round number 2640, at the closest round number to that support. Okay, that's where it is. But on the 30-minute, you can see that there is a level there, right there. The 30-minute as well, there's a level right there as well. So the levels are correct. This low is 3850. Okay, and if I just drag this to the should see price reacted beautifully. Yeah, see, price did react to it perfectly. So the levels are correct. Stop loss is in place. I'm not going to. I may close the trade if a candle closes back in this light red area, then I will probably close one of the positions. Otherwise, I'm not doing anything. Stop loss is set. TP levels are set. I'm not doing anything. Okay, I'm just going to leave this trade, let this trade run to the final TP level here, 210 pips. Let's look for more support levels. So there is support right here. It's not much information there to draw support. Yeah, there's a level right here. There's a level right there. Yeah, it's perfectly touched that as well. If we take it back to the 25. Yeah, perfect touch. So So even back to the 20th of September, you can see how price touched it. That's why it's so important to draw them correctly. So this high is 435, 435, and that level right there is 541. Yeah, maybe a little bit lower. 536. Yeah, that's better. Okay. So candle close, 5-minute candle closes below this, we're coming to this. 5-minute candle closes below this, we're coming here. Okay? We're coming down. So that's the first TP level, 80, 89, 88.6 pips, roughly about 89 pips. Coming down, if you look at the 15-minute close strong bearish, which is nice to see, perfectly from 2649.28. We had marked that before the NY open. That is why I do take time and draw these zones. And then these zones, and I identify them, which ones are high liquidity zones, because I want to get these reactions, right? These kind of reactions. Very tight stop loss. You can even put your stop loss above this and take the trade to this support. That would be your first TP, and then obviously if it closes below that, we're coming down. Okay, so that's the whole idea of doing the analysis. That is the whole idea of coming to the charts 30 minutes prior to the session to be able to do this, right? This does take about 30 to 40 minutes to draw the zones correctly. We are coming down now. We should hit TP1 2640. Okay, let's see if we do have any more support levels. That should be enough, but since we got a TP right here, so right there, that's the next level right there. It's open 3078, 3078. Okay, and let's take this far back. Yeah, price did come to it. 78. This low is 187. Okay. Yeah, we came here, we touched. Yeah, we did touch here. Yeah, perfect. We touched here, perfect, perfect. Okay. So those are the support levels. And then there is one just here as well. That's the next one. That's the last one, and the next one is demand. Open 832. Okay. 832 and $29.07. 29.07. So price touched that, touched here, touched here. It's the old one. Yeah, touched here, touched, reacted here. Yeah, perfect. Okay, so those are the levels. 1, 2, 3, 4, 5 levels. They're all on the 15-minute, but if you look at them on the 30-minute, you'll see them as well, but they're on the 15-minute. Now these are the areas where price can pause and pull back. Okay, but if you do close, so what I say basically is if a 5-minute candle closes below them, then it's going to come to the next one. Okay, or a 5 or 15-minute candle closes below them. Okay, so basically on the 5-minute now, price has closed right at support. The next one needs to close again at support or close below it. If it doesn't, we're going to pull back up again, right? So this candle or the next candle has to close inside this gray area or below the gray area for price to come down to the next one. Okay, 2 minutes more for this candle to close. Once you draw them, it's very easy. What the hell did happen there? Okay, so the 5-minute candle is trying to close above this again. If we do close above this and we push up, and if a 5-minute candle closes back inside this light red area, okay, inside the light red area, it pushes back and close back inside, then I will close uh, one of these open positions, probably this one. I'm going to close this. Okay, but price has to come back in, and a 5-minute candle needs to close back in the light red area, because what that means is if a 5-minute candle closes back in this light red area, then price is going to trade back into that range. Okay, so if you look at that candle, why we drew that light red, why I drew that light red area, is because of that single candle. Okay, this single candle. Now in this dark red area, so if you watch the first 30 minutes of the stream, in the dark red area, this is the candle that stands out the most, right? In this dark red area, this is the one that stands out the most. This is a bearish engulfing candle. I call this candle, it's a liquidity grab basically, or a liquidity candle, right? So inside that we found 5-minute or I think a 1-minute supply zone, and that's where we marked 2649.28, and that's where price came to enter. Now, if a 5-minute candle closes back inside this, that means price is going to trade back into this candle, into this range. It's going to trade into this range. I do not want to hold drawdown while it trades into this range, because this candle is a 40 pip, 39 40 pip candle, right? I don't want to trade, I don't want to hold drawdown in a 40 pip range. So that is why I'll manage risk. I'll close both my positions, or I will close one of them, the one with uh, the low entry. I'll close that, right? Because if price trades back into this range, if price trades back into this candle, we don't know if price is going to go down or break this high and continue into the next range, into the next light red area, right? I don't know that. So I'm not going to hold drawdown until price hits my stop loss. I'm going to manage risks. So that's the way I manage risk. That's very important to remember how to manage risk. Now you can do that with the 15-minute time frame, or you can do it with the 5-minute time frame. I like to do it with the 5-minute time frame because my zones are smaller. They're like 39, 38, 40, less than 40, sometimes 25 pip zones. So I like to manage it on the 5-minute. But it has to be there has to be a valid reason or a logical reason. It's not just if price comes back into that range. No, there has to be a 5-minute candle close back into that range. That means that'll be a bull candle, obviously, if it comes up and closes in that range. And then the next candle could easily break the high and continue higher. That's the reason. Yeah, so this 5-minute candle did close bullish. From here, we are trying to push back up. Okay. Candle needs to close below this area. So this is why you take time when you're drawing support resistance levels, because when you draw them correctly, then you see these bounces perfectly at the zones. If I had drawn this zone somewhere here, then I would have not understood why this happened. But because I've drawn it correctly, right? You can see the number of touches here on the 15-minute. You can see the number of times price touched that, right? So that is why you draw it like this, and then you do get a reaction when price comes there for the first time. So if you come back up here and a 5-minute candle closes back inside the light red area, I'm going to close one of my positions, or maybe even both positions. So that's we got about a minute minute and a half for the 1-hour candle to close. And so far the 1-hour is rejecting that area. The 30-minute is also rejecting that area. 30-minute is closing with a gap. See that gap? See, price closed here, opened here. There is a gap there. So when you have a gap like that, it's very likely price comes back up to test that gap, or to fill that gap, test that gap, whatever you want to call it. Okay, you can see it on the 15-minute as well. You can see it. Can you see it on the 5-minute? Yeah, you can. So that's the candle close, and that's the next one open. Okay, that's a 5 pip. It's a very small gap, but there is a gap. Nevertheless, there is a gap. Yeah, you can't see it on the 1-minute, but on the 15 minutes is pretty clear. There is a gap there, so we could come back to that area. What is that price level? 2646. What does that look like on the 1-minute? 2646 right here. Okay, so there is supply there. Right there is supply. Look on the 5-minute. Yeah, so that's a rally. Those are base-in candles and a drop. So price could come there to go further down. Or if it comes there, then we could also close. If you close back in, then we're going back up, right? 598. Okay, so the 50-minute candle closed above support. 30-minute, yeah, is like that. The one has closed somewhat a doji. A 5-minute candle has to close back inside this support or below it to continue down. But there is supply here, so price could come up to test this area. So if you look on the 5-minute, there is clear supply there. There is a rally, basin candles, and a drop. If you go down to the 1-minute, you'll see the same structure. So price can come up here, even here, and then drop or continue higher. $75. Yeah. So maybe this place would have been this support right here, 2641. 2641 would have been a good area to close one of these trades, about 78 pips, instead of waiting below it. Because when we draw support correctly, there is going to be a reaction. There is going to be some sort of a reaction. Okay. Sorry, I just saw your message. Yeah, so we are pushing back up from this support. Price is pushing back up. Okay. Coming, let's see, once price gets to this area, what it does. If it, as I said, if a 5-minute candle comes back and closes inside this light red area, then I'm going to probably close both trades. I don't want to hold drawdown. It's a Friday. I don't want to, take a loss. I'm trying not to take a loss today, but you never know what's going to happen. All you can do is manage risk. That's the only thing that you can do, is to manage risk, right? So price is the support that we drew. Price did touch it, and it's kind of pushing up. We've come to that area. We've come to this area, that gap. Okay, this 15-minute gap. It's coming to retest that gap right there. That's a gap. Price closed here, opened here. So we came exactly. So generally, when price creates gaps, it comes, if it's a high volume, if it's inside, if it's within high volume time, then it kind of comes during that same time to retest the gap. Now, if we close back above here, then we're continuing higher. We have to push down. We have to push down to come down. So daily is still pushing up. And that is the reason why I spend time drawing these, identifying these high liquidity zones, and then inside those zones, identifying areas where price can turn. Right? That's the reason I do that, because now if price does come here and closes back inside, then I know that this light red area is probably not going to work, and price is very likely going to come into the next light red area here, right? But if I don't spend time doing this before the session starts, then I will not understand why price is doing what it's doing, right? I'll be confused if this level doesn't work and it goes further up. I wouldn't know where it's going to go, just like what happened yesterday, right? So I said this yesterday. So if you did watch the streams, I said if price closes above this supply, we're heading to the supply above here, because that's the next place. And that's the area that we had identified. That supply level, we had identified that yesterday. So if we close above, that's where it's coming to. So once you know where price is, once you have there's no guarantee in anything, but once you have an understanding of what price is doing and where it's heading to next, then you can look for a pullback to get in on that trade. And that's exactly what I did. So then I look for my setup. Okay, so once price broke and closed above that supply, the H4 candle, right? This was the close of the H4 candle right here. Okay, this was the close. This 15-minute candle here was the close of the H4 candle, and it closed above the supply to the left. That supply right there. Right, there was H4 supply there. This candle closed. So once that happened, then I just need to look for the pullback to take the trade, right? You don't chase. You don't chase here. Just because you have a candle close, you don't buy the breakout and take the trade. It may work, but most of the time, if you do get in on a trade here, you're going to be holding drawdown. And if I did take a buy here, I would have been in a 100+ pip drawdown. And I hate holding drawdown. So I always wait for the pullback. And this is where the EMAs cross. So once the EMAs cross, then there is more confirmation that price is heading up. Okay, price is heading up. So then I drew my fib there on that candle and then waited for the pullback. And I just placed a pending order and I left, and price did come, and then I got about 6.5 or 7 hour trade or whatever. That really doesn't matter. Okay, so we are reacting to that area. We're trying to reject that area and continue down. But a 5-minute candle needs to close below this. 5-minute candle needs to close below this supply zone as well. We need to close below here. And the next one needs to break the low for price to come down. If 5-minute candles start to close above this green level, then we're heading here. And once it starts to close above into this above the light red area, then we are heading higher. It's Friday, so things can be slow today. I'm not expecting price to move really fast because it's PPI. PPI doesn't have a lot of volume like how CPI does, So as you can see, there was not a lot of volume at all. That was the news candle, just a 50 pip candle compared to the CPI candle, which was this, almost a 200 pip candle, 195 pip candle, right? And PPI was just a 50 pip candle. So volume may come in later after NYSE open, or maybe around 10 a.m. Eastern Standard Time or Eastern Daylight Time, EDT, New York time, basically around 10 a.m. New York time or after 10 a.m. New York time. You might get direction and volume after 10 a.m. New York time. So maybe 10, 10:30. By then, the 4-hour candle would have closed. So you might get direction after the 4-hour candle closes, basically. So the 4-hour candle has about 50 minutes to close, roughly about 49 minutes to close. So we are rejecting so far, but in the next 49 minutes, 50 minutes, price could push up and close here. And if we do that, then we are heading higher, much higher. If the 4-hour closes inside here, we could be coming deeper into this level or into this level right here. Okay. So, okay, we got a 5-minute close below, but it has a more of a bottom wick than a top wick. So price could be heading higher. If the next 5-minute candle closes back in above this green level, then we're heading higher. This candle or the candle after that needs to close bearish again below this level, right? We're creating a minor support level right here. The next 5-minute candle needs to close below that for price to come back to this support. Otherwise, we seem to be heading higher. Yeah, so price is bouncing right at that level again, pushing up. Okay, so I'm going to be watching this. If a candle comes here, 5-minute candle comes here, I'm going to close this trade. 5-minute candle closes, yeah, back in this area, then I'm going to close this position. Because we might get direction only after the 4-hour candle closes, not before that. Yeah. So that's a long time, and I don't want to be. I hate holding drawdown. So if volume is going to come in after the 4-hour candle closes, then I rather close my trades and maybe wait for that, or probably call it a day because it's a Friday. Call it a day and wait for next week. Next Monday is a holiday, so I'm not going to be here. I'm going to be trading next Monday. Next Monday is, I think, Columbus Day in the U.S. So next Monday is a holiday. But Tuesday onwards, I'll be here. Just look at the just look at next week. Yeah, so next week we've got nothing. Next week is it's the third week of the month, so there is absolutely nothing happening. Monday's a holiday. Tuesday, no news. Wednesday, no news. Thursday, there is retail sales. Might just have a bit of volume. Friday, nothing. So it's a very average week. Okay, so price is pushing up, coming back here. If this 15-minute closes above this, then the next one is going to break the high. Yeah, so I'm going to, soon as the next one breaks the high, I'm going to close one of these positions. Okay, that's how you manage risk. You don't hold drawdown or hold or wait for price when you know that price is bullish. We are very bullish on the daily, right? Price is very bullish. So this was kind of a pullback that I tried to capitalize on to come here, but it didn't. Okay, so we've closed inside here. So this high is 789, 789. Okay. Yeah, so the next one, this candle is very likely going to break this high. Okay, we're going to break the high. We're just kind of coming down to create a bottom wick before we go up and break the high. So at which point I'm going to close one of these positions. I'll keep the other one open. Yeah, here we go. Okay, so close that one, broke the high. Now price may come deeper, but I've closed one position, so I've managed risk. So, and I'm at break even right now for the day. And if this goes and hits my stop loss, I'll lose maybe like 20, 25, 29 pips, which is fine. It's just probably about a 0.05% loss, which is absolutely fine. I'm going to leave this trade as is. I'm not going to manage risk on this trade. If price is to go and hit my stop loss, let it do so, because it'll be a very small loss, maybe a 0.05 or 0.06% loss. That's okay. Yeah, so just going to leave it, and I'm going to wait to see how the 30-minute candle closes, because now the 30-minute candle is very likely coming up to break this high and continue deeper. Okay, so that was the opportunity right there from 2650 or 2649.50 straight down to 2641 or 2641.50, about a 85 pip drop. Now we are pushing back up, right? So you can see, like I said, 5-minute candle close back in the high liquidity zone. So the next candle broke the high and is pushing back up. Get rid of that. It's not important anymore. $51.99. That's the next area that I've drawn for a zone to take a trade from. $51.99. Came right there. Coming deeper. Probably break this high. I might, no. If I have a 1-minute reaction here, I might take another trade right here. No, we are pushing up. Okay. Yeah, we're pushing up to break this high. A 1-minute candle needs to reject this area for price to continue down. Need to see a 1-minute candle reject this area. Oh, there we go. Yeah. I want to see a bearish engulfing candle. Seconds. Oops. Okay. Okay, that's a volume push. That's a volume push right there. Okay, so we respected this high, and that's a volume push, that candle right there. So let's see if that candle works and price comes to the middle of that somewhere here and continues to push back down here. That's liquidity. It's a 26 pip candle from this zone. So let's see. Now the reason I did take a trade here is because price came, created this doji like 1 minute candle and struggled there. So I placed a pending order there. I got entry here. I got filled here just above, which is even better. That's very close to 264928, just above it, which is even better. And price did push down. Okay. Now, if this is a liquidity candle, this 1 minute is a liquidity candle, then price should grab liquidity from this candle to push further down. If this is to see that, you need to have the 5 minute needs to close bearish below this light red area, or even better below this dark red area. We need to see a 5 minute candle close below it. 2 minutes more for this candle to close. If this isn't, then we'll close back above and then head deeper in. Yeah, so I got about a 33, 34 pip stop loss on that, and then smaller on this one. Yeah, so we are rejecting that light red area now again and pushing. So that supply zone that we had drawn is still working. Price came here, pushed down, coming down. If we break the low here, if we break the low, then partial positions should close. Price should come down, and partial positions on the second entry should close. But this low needs to break. This is the yeah. So the next candle needs to break this low to come further down. Fill this candle into this range. But this candle has no top wick. So generally when a candle has no top wick, either the same candle or the next candle or the one after that comes back up to grab liquidity from above that. Okay, that's what usually happens. So this has no top wick, this candle. You can see on the 1 minute as well, it has no top wick. It's got 5 minutes for the NYSE open. Now, what's happened so far? So price pre-NY, we really don't care about pre-NY because I don't trade the pre-NY session. But NY session, price dropped down about 90 pips, right? From here, from 2650, we dropped all the way down here. That's about 90 pips. And since then, we've had a pullback. Now, is the NYSE session going to continue higher? Is the pullback to continue higher, or is it going to reverse? The high time frames are pushing up, so it's very likely that the NYSE session continues higher. It's very likely, right? So that is why when you do understand, that's why we do. I look at charts on the H4. That even though that's a supply zone, we are creating fresh demand zones. We are in supply, but we've created fresh demand zones, and we created support here. We are creating H4 support in 30 minutes more for this candle to close. If this candle closes like this, then there'll be a new demand zone here. So if you're creating fresh demand zones or more demand zone, that means price is pushing up. Okay, that's the high time frame. That's what's happening on the high time frame on the H4. So yeah, so the 5 minute closed inside that, which really doesn't help us because it's close back in the light red area. It needs to close below this light red area or below this dark red area to the dark red area to continue down. But closing inside means we're continuing higher. very similar to yesterday. Okay, very similar to yesterday. Yesterday it's the exact same thing that was happening yesterday. Price, show you what happened yesterday here. We came up, we were close. If you look at on the 5-minute time frame, after this price pulled down, but we started closing 5-minute candles, started closing inside the zone higher and higher, and started pushing up, right? That's where I got stopped out. So it's a very similar story to what's happening now. And then around 16 is when we kind of had a 16. So it's, yeah, about now is when we kind of had a pullback. NYSE is about now. NYSE is opening in a few minutes, 3 minutes. So 16.25. What happened at 16.25 yesterday? 16.25 is that, no, here. Yeah. So we just range. So just before NYSE open, we kind of pulled down. We pushed down, right? Just before NYSE open, we pushed down, and then we continued high. Yeah. So this candle, it's not doing anything right now. It's not doing anything. This could be just creating a bottom wick to push back up. This 5-minute candle has to close below the red area, and the next one needs to break the low to continue down. Otherwise, we're going back up. This candle could be creating a low wick here to push up. The 5-minute candle has to close below these wicks or at these wicks to continue to this range, to this candle. There's nothing happening right now. We're just ranging. It's too much of bullish volume. We're struggling to break these lows, 5-minute lows and 15-minute lows. Yeah, so the 15-minute is also probably going to close a doji here, which means the next one's going to close back in the range and continue higher. Unless this comes down and closes back here, below this, below here, below this, below 2646. We have to start to close below 2646. If you don't, we're continuing higher. Yeah, we have to close below this resistance. Minor M5 resistance is right here, 2646. 15-minute candle has to close below that to continue down. Okay. It's not closing below, we're closing above, so we could be continuing higher. The next candle could close back bullish and go higher. This is the area that we have to close below. And we're closing above it. The 15-minute candle has to close below this. Two, 6, 4, 6. Okay. So partial positions on this trade closed as well at 30 pips. That's at 30. Partial positions closed there. So now if you go back, I'll lose less on this trade than I initially planned to lose. That's the whole idea of closing partial positions, right? Because if you have a stop loss of about 35 pips and you close about a small position, 25% of your position at around 30 pips, 25 pips, 30 pips, then you're going to lose less on that position. Yeah, so right now we're still at a kind of a break-even stage for today. Nothing's happened. No real gains and no real loss as well. and candles are pushing up. Yeah, we're going back up. We're struggling to close below this 2646. Going back to retest this high. This has no top wick. 30-minute closed bullish with a wick range to fill. That's what's happening right now. So that's exactly what price is doing. It's going to fill this range. Once it fills the range, we break the high, we might go deeper. Okay, so I'm gonna again manage risk on this trade. I want to see a 5-minute candle close above here. I'm going to close probably both positions. If a 5-minute candle closes above here, this minor resistance, then or closes above 2650, then I'll close probably both positions. Because if we close 5-minute candles close above this, means we are continuing deeper into this range. That's a 30 pip, 33 pip range. We're going deeper into it. Okay, 2 minutes for the candle to close. Let's leave that there and just look at this entry again. Why we placed the entry there. Because of that, that's not going to hold. Yeah, this is not going to hold. It's pointless making an entry there. This level here is not going to hold. If it's holding, it's got to be this supply zone here. So you have a rally. These are all basing candles, right? This is the liquidity candle. So there is no point placing a pending order here, because once price comes here, we are breaking this high, we're going up. We're going to get stopped out, okay? So if price has to hold, if this zone has to hold, this light red area has to hold, that means this candle has enough liquidity. That's what we are trying to say, right? That this candle has enough liquidity to push price down back to this support and further down. If this candle doesn't have enough liquidity, it comes here. There's no point taking a pending order here, because we're going to break this, because that's the open of the candle. So we're coming back up. No point taking a pending order. We're going straight up. So I'm going to delete that pending order. There's no point holding that there. But there is a supply zone there, rally base drop. Okay, but once we come there, that candle is done. That's the open of the candle. That candle is done. The volume of the candle is in the body. That's where the volume is. The chunk of the volume is in this body, in this 30 pip candle body. If you go down to the 1 minute time frame, yeah, so you see this. This is where the bulk of the volume of that candle is. 36, 35 pip candle, right? 3 1-minute candles inside that 5-minute candle. That's where price needs to, if it is to turn there, here there is open 128, 8, close to 6. That's okay. That's a place to take a trade. Okay, that's it. Now, if this doesn't turn here, then that's it. Then we're coming deeper in. This is the NYSE open. So price is pushing up. 30 minutes. Yeah, we broke the high. We have to push down. If we close above, we're coming here. Okay, so stop loss is right there. So this is also about a 20 pip stop loss. Um, hmm. Okay, how did the 5-minute candle close? Closed inside. Yeah, 3 minutes for this candle to close. And if this comes up here, I think that'll be the end. I'm not going to, it should be a break-even day for me, and I'm not going to try to take any more trades. It's a Friday. That'll also be the end of the stream, because then after that I'm going to have to wait for the 4-hour candle to close, and then another 30-45 minutes after that. So I'm not going to be here. I'm not going to be here for the next hour and a half or 2 hours. So if this trade idea does not work out, this zone, so this is the zone, right? If this zone doesn't work out, then that's the end of the end of my trading, for the day, for Friday, because it's pointless, because then you're going to have to wait for, we are in supply, so there is no, I'm not going to be buying in this. So we have to wait for the 4-hour candle to close, then wait for maybe 30 minutes after that to see if there's going to be a pullback. So that's going to take a long time, right? If if this zone has to work, it's got to work now. Price has to push down now. This is the NYSE open. This is the time when volume comes in. So price needs to push down now. It's unlikely. It doesn't seem like it's going to push down now. We are very bullish at the moment. Very bullish on all the time frames. The 1 hour closed with the doji there, fill the range, so 30-minute close back up. They're pushing up. Yeah, so it's gonna, what does the 5-minute look like? Yeah, we are closing. Yeah, I'm gonna close. Huh. Yeah, once this 5-minute closes here, the next one should break the high. So this high is 220, 20. Yeah, should break the high. Okay, that's it. Manage risk. Close this one as well. Done. Yeah, there we go. So manage risk. 0.1% loss. Like I said, this is why you manage risks. Now all of this is done. That was a trading idea for that zone right there. Now we've tapped into 2653.19. Price is trying to push down, but I'm not going to do anything because I'm going to wait for the 15-minute candle to close. Get rid of that. Get rid of that. Okay. And get rid of that. Okay, so that's the next area. So that first supply zone, which was right here, did not work. Now price is coming into this supply zone right here. Price has already come there once, twice, 3 times. So the chances of this holding on a Friday in a very bullish when price is very bullish, is kind of asking for too much. So price, because it has, so if I just zoom in for you guys, that's a very weak, it's a very weak supply zone, because you can see, price kind of tapered here, so it's not a rejection. So you can see the difference between these two, right? Look at that push down, a bearish engulfing strong push down, directly go up, a massive amount of sell orders coming in and pushing price down 126 pips, 130 pips, right? From there, one candle, 130 pips. Now look at this. Price ranged in this area, pushed down about 28 pips. Then this candle pushed down, which is great, 83 pips. But price has come here into this candle, halfway into this candle. It's come there once, it's come there twice, and now it's come there for the third time. Okay, so this zone holding is unlikely. I said this at the beginning of the session. This candle, not this zone, this candle holding back, holding orders to push price down, to reverse price, is unlikely, because we've got a lot of bullish volume. If you look at the 4 hour, it's very bullish. If you look at the 1 hour, it's bullish. If you look at the 30 minutes, it's bullish. If you look at the 15 minute, is about to close, it's bullish, right? You look at the 5 minute, yes, we are getting a pull. So from the 4 hour, from the daily, all the way up to the 15 minute, we are bullish right now. So this weak tested zone, we've tested it 3 times already. 1, 2, 3. A tested zone when everything is bullish is unlikely to hold. You might get a bit of a reaction here, but price is going to break through this. And once we break through this, it's very important to understand this. Okay, very important to understand this. Sorry, where is that zone? This is the 5 minute candle that is the biggest candle, right? This is the liquidity candle. 56 pip candle in this zone that has the most amount of liquidity. You can see the most selling volume is this. Price has come to the midpoint 3 times in this candle. Above this candle, there is no significant candle that may hold volume. I hope you understood that this is very important, very, very important. In this high liquidity zone, I'll repeat it again, in this high liquidity zone, this is the biggest sell-off, 56, 57 pip candle. Price has come to it 3 times already, right? 1, and I showed you the second and third time. 2, and then here, 3, okay? So this candle may not hold. Once price breaks this high, there is nothing to stop price from going right through this zone, okay? There's nothing to stop price because there's nothing, no significant bearish candle here to hold price. So once we break it, we are coming into this candle. This is the candle. If I am to take a sell trade today, if I had a gun to my head and I was forced to take a sell trade, I would take it on this candle. This candle. This is the candle I would take it on, right? Because this candle, price hasn't come to that candle yet. It's never come to that candle. 2660.13. We've never come to that price point. That's on that candle. That's the candle I would want to take a sell trade on, not here. Even though we are pushing down, this is probably just a pullback to continue higher, right? Yes, we did drop 56 pips, but for the reasons that I said, I'm not going to take a trade there. Okay, the 4-hour candle is about to close. I'm going to wait for that 4-hour candle to close, just like yesterday, right? This is what happened yesterday. Going to wait for this 4. This is the candle that opens at 1300 IC market server time. Let's get rid of that. IC market server time 1300, and this is the same candle. Closed bullish. The next one broke the high, went up, then dropped 136 pips, right? So if I'm to trade that candle, I'm going to wait for that candle to open first, break the high, maybe come here, and then look for a trade. I'm not going to trade into this because it's already touched 3 times. I'm not going to trade in this. Even though it's a high liquidity zone, I'm not going to take a trade here on a Friday. If I am to take a trade, then it's going to be here. This is the area it's going to be. I'm going to look to take a trade. This high liquidity zone right here. So that's about another 100 pips away. Okay, price needs to come there for me to be able to take a trade. But I'm not going to be there. I've just had like a 0.19% loss. That's absolutely fine. But later on, if you are trading later on, then this is the area you should be looking to take a trade. But I don't suggest you try to do anything today. It's a Friday. If it was a Thursday, yeah, absolutely fine. Wait for a trade here. But it's a Friday. Okay, we might be very bullish and try to go higher. Yeah, come deeper into that level that is 266013. I just want to see what it looks like here. 2603. Yeah, so that is what it looks like. So above these daily highs, we've broken this daily high already. This high 5309, this 53. We've broken this high. We're coming into this wick here. We should trade into this range here now, this wick right here, which is about a 63 pip, and then maybe a potential move down, because right there we have resistance as well. H4 4-hour resistance right there. It's perfect resistance, right? Just above this candle. So that's the area if you are to take a trade down back to 2650 or even further down to 2632. It's about a 270 pip drop. That's the area I want to take a trade at. 2660.13. Yeah, this I'm not interested. We've tapped that area too many times. 1, 2, 3. No. And yeah, once it breaks, this breaks, we're just going to break this high for sure. And that's a good 36 pips as well. Okay. All right. Just got about, I'll be here for another 10 minutes until the 4-hour candle closes. Draw another support resistance level here, right here. Hmm. Mm-hmm, mm-hmm, mm-hmm. Just want to see. It looks like, yeah, resistance here. Maybe a little bit lower. Yeah, a little bit lower. Yeah. 2645. Yeah. So there is a resist support level right there. So you can see how price tapped it here, perfect here, perfect here. Yeah. Yeah. Mm. Okay, on the 15-minute, broken this low, broken this low. Can price come here? No, we've already come here. Maybe it'll come here to continue higher. Yeah. So what does the 4 look like? Yeah, this is going to be 6 minutes. This is going to be a demand zone. Price is going to close bullish here, making this the new demand zone. All right, so you're going to have a rally, a single basin candle, and a rally. Right, 6 minutes more for this candle to close. So it's very likely that this candle is going to close above this support level that we've drawn here. So I'm just trying to get that right. I don't want to get it wrong. Mm-hmm, mm-hmm. 537. Yeah, that's better. That's much better. Yeah, yeah, perfect. Perfect. Yeah. Okay. That's better. So, okay. So price is closing above this support. We might pull back. So we touch that, drop 57 pips. 4 needs to close above this support to continue higher. Once the 4-hour candle closes, we might have a pullback. Pull back around to this area, maybe here, 2641 or 2642. And 2642 is right there, that candle. Yeah, so that candle, yeah, you might try, I might take, if price pulls back, I might take a buy here to continue up here and then all the way up there. All the way up there. It's a 160 pip move. If we come down here, pull back to go up. Okay? Because it's very similar to what happened yesterday. Okay? So we made a high around this time, 1630, 1645. There you go, 1645. Okay, that's the high, 1645. And then the pullback. But the pullback happened very later on. So I might just place a pending order with a stop loss to take a trade up. Okay, I might just do that. Yeah, so in 3 minutes session, the stream is going to end, but that's the idea. The 4-hour candle is closing above this support and is very probably close above 2650. But even if it doesn't close above 2650, that's not important, as long as it closes above this support. Okay, and that's probably what's happening right now. The 4-hour candle needs to close above this support level, because this level is a 4-hour level, right? We've got resistance there, we've got support here, here, yeah. And the next one then is above here around 2650. That's the next level. So the next one is at, yeah, here, 2650. But no need to draw support there. You've got 2650. 2650 is a level by itself. It's a psychological number. You can see that price will react to that level like it has done here. It touched it, dropped 92 pips. But the 4-hour candle needs to close. Once the 4-hour candle closes, which is in a minute and a half, it should close above this. Then kind of redraw this. So that will be the zone. It's got a minute, so we can draw the zone right now because it's unlikely that the candle is going to close bearish in the next 1 minute. That's the zone. Okay, that's a rally, single basin candle and a rally. So the open is 483, low is 628. 483, 628. Okay, that's the zone. This candle is going to close in 45 seconds. So it is closing above this resistance, 4-hour resistance, right? And that 4-hour resistance is right here what we've drawn on the 15 minutes. So we are closing above it, which means we are continuing higher. Now, where is price going next is what is important to us. Price now has touched this. We are going deeper into this zone. And I said once we go deeper, we are breaking this zone. And once we break the light red area, we're going to go right through this. Where are we going next? We're going to 2660.13. So make note of that. That's where price is heading today. That's the minimum area where price is heading today, above this candle high, right? The 4-hour candle closed. Now that's the new demand area. So if you want to take a buy, don't chase price. Don't just buy and hold drawdown. Wait for the pullback, right? Wait for the pullback. So here price did take out that, did take out this. So this is kind of the area I want to take a trade at, maybe here. Stop loss about 30 pips to go up about 160 pips, right? That's the area I want to take a buy to go up. Yeah, because if you look, this is a liquidity candle, a massive liquidity candle from this high liquidity zone. It is a high liquidity zone because it took out this supply here, right? This took out, see, this supply, this move up, this candle high broke that high there. So this zone has taken out all of this supply, this one move up, right? So price needs to come into this candle right here to go up. Does that make sense? And inside that candle, what is the biggest candle? Is this. This is the candle right there. This candle, let's take it from the close. 33 pips, perfect. That's the candle price needs to come into. So if you drew, yeah, that's where it needs to come to, that candle right there. Close 4608 and the low is 267. 4608, 267. Perfect. So that's the candle. If you go down to the 1 minute, yeah, this candle right here. This candle right here. Close 44.46. 44.46. Okay, that's the area you want to take a buy, because price failed to come back in, and we go. You can take an entry even here if you come down. Open 43.50, close, yeah, 43.50 is good. 43.50. Yeah. Let's look in the 5 minute. And here, close 43.09. 43.09. Okay. And if you do take a buy, then stops below this, below 2640. That's your stop loss. That's where you take the trade. You can take a small position here, maybe one here, or one even down here at 2642. 2642, take a buy, anticipating the push up to 2660, right? That's the move up. Okay, that's the end of the stream. I'm not going to be here. Maybe I'll place a pending order for later, but that's the end of the stream. All right, so I will be back here on Tuesday, not Monday. Monday is a US holiday, so I'll be back here on Tuesday. We'll do the same thing. All right, have a great weekend. See you Tuesday.